The foreign exchange market, or Forex, is the largest and most liquid financial market in the world. It operates 24 hours a day, 5 days a week, and spans across major financial centres in different time zones, including London, New York, Tokyo and Sydney. Trillions of dollars change hands daily, making it a dynamic and fast-paced environment where fortunes can be made or lost in the blink of an eye. But this behemoth has surprisingly humble origins. Long before the advent of digital trading platforms and sophisticated financial instruments, people engaged in simple barter systems. To understand Forex, we need to take a trip back in time to a world before money, to the days of bartering. In ancient times, goods and services were exchanged directly for other goods and services, a system that worked well in small communities but had its limitations. As societies grew and trade expanded, the need for a more efficient medium of exchange became apparent. This led to the creation of money, which evolved from shells and beads to coins and paper currency. Over centuries, financial innovation continued to shape the way we trade, culminating in the sophisticated Forex market we know today. Buckle up as we fast forward through this fascinating journey. Forex is more than just numbers on a screen. It's a complex and intricate system that reflects the economic health of nations, political stability and market sentiment. It's the lifeblood of international trade, enabling businesses to buy and sell goods and services across borders with relative ease. Every time a company buys goods from another country or an individual invests overseas, they participate in the Forex market. This market facilitates the conversion of one currency into another, making international trade and investment possible. It's the invisible hand that sets the prices of imports and exports, impacting everything from the cost of your morning coffee to the price of a new car. Whether you're aware of it or not, Forex plays a crucial role in your daily life, influencing the cost of goods and services you rely on every day. Understanding Forex is not just for traders and economists. It's for anyone who wants to grasp the forces that shape our global economy. So, as we delve deeper into this topic, remember that the Forex market is a powerful engine driving global commerce, affecting us all in more ways than we might realize. Imagine a world without money. You're a farmer with a surplus of wheat, but you need tools. You have to find someone willing to trade those tools for your wheat. This is the essence of bartering, the earliest form of trade. It was simple, direct, but incredibly inefficient.
Bartering had serious limitations. What if the toolmaker didn't need wheat? What if you needed a large quantity of something, like livestock, but your trading partner only wanted a small amount of your goods? The need for a more versatile system was clear. Enter currency.
Early forms of currency, like coins, emerged to solve the problems of barter. Coins, often backed by precious metals, had intrinsic value. This made them universally accepted. As trade flourished, so did a new profession, the money changer.
Enter the Medici family in 14th century Florence. They revolutionized banking, introducing concepts like credit and international finance. These innovations laid the foundation for modern banking and the complex Forex market we know today.
Fast forward to the late 19th century. The gold standard emerged as a dominant system. Currencies were pegged to a specific amount of gold. This provided stability and facilitated international trade. But like all systems, it wasn't perfect.
The gold standard was inflexible. Governments couldn't print more money than their gold reserves allowed. This limited their ability to respond to economic crises. The system eventually crumbled under the pressures of World War I as nations abandoned it to finance their war efforts.
World War II devastated the global economy.
In 1944, as the war drew to a close, delegates from 44 Allied nations met in Bretton Woods, New Hampshire. Their goal to rebuild the international monetary system from the ground up.
The Bretton Woods Agreement established a new system. The US dollar became the world's reserve currency, pegged to gold. Other currencies were then pegged to the dollar. This system brought stability and facilitated post-war economic growth, but it wouldn't last. Section 6. Floating into the future. The end of fixed exchange rates. The story of how the world transitioned from fixed exchange rates to floating ones is a fascinating journey through economic history. The Bretton Woods system, established in 1944, was initially successful in stabilizing global currencies. However, it faced significant challenges in the 1960s. The United States, a key player in this system, began to experience economic issues, including rising inflation and growing trade deficits. These problems were exacerbated by the costs of the Vietnam War and domestic spending programs. This put immense pressure on the US dollar, which was the cornerstone of the Bretton Woods system. As the dollar weakened, the system of fixed exchange rates became increasingly unsustainable. In 1971, in a dramatic move, President Nixon announced that the United States would no longer convert dollars to gold at a fixed value. This decision effectively ended the Bretton Woods system and marked the beginning of a new era in international finance. With the end of the gold standard, currencies were now allowed to float freely. Their values were determined by market forces such as supply and demand, rather than being pegged to a specific value of gold. This ushered in the era of floating exchange rates, a defining characteristic of the modern Forex market. Traders and investors now had to navigate a more volatile and dynamic financial landscape, where currency values could fluctuate significantly in response to economic events and market sentiment. The shift to floating exchange rates has had profound implications for global trade, investment and economic policy, shaping the world we live in today. Section 7. The digital revolution, from trading floors to trading apps. The late 20th century witnessed a technological revolution that transformed Forex trading. The advent of computers and electronic communication networks, or ECNs, removed geographical barriers. Trading became faster, more accessible, and more transparent.
The rise of the internet and online trading platforms in the late 1990s democratized Forex. No longer the exclusive domain of banks and institutions, individual traders could now participate in this global marketplace with ease.
Section 8. Taming the Wild West regulations and market participants in Forex. The early days of online Forex trading were like the Wild West. The lack of regulation led to scams and market manipulation. Governments and regulatory bodies stepped in to establish rules and protect investors. Today, Forex is a highly regulated market. Key players include central banks, commercial banks, hedge funds, corporations, and individual traders. Each participant plays a role in the constant ebb and flow of currency values. Section 9. The present and future of Forex, a global marketplace in constant motion. The Forex market, also known as the foreign exchange market, is a vast and intricate network where currencies are traded globally. It operates 24 hours a day, 5 days a week, and is the largest financial market in the world. The Forex market has come a long way since the days of bartering. In ancient times, people exchanged goods and services directly, a system that was simple yet limited by the need for a double coincidence of wants. From coins to digital currencies, the concept of money has evolved dramatically. Coins made of precious metals were among the first standardized forms of currency, providing a more efficient means of trade. From physical trading floors to online platforms, the way we trade has been revolutionized. The introduction of electronic trading platforms has made Forex trading more accessible to a broader audience. Its evolution has been marked by innovation and adaptation. Over the centuries, financial innovations such as the gold standard, fiat money, and now cryptocurrencies have continually reshaped the landscape of Forex trading. Today, Forex is a complex, fast-paced and ever-changing landscape. Traders must stay informed and adapt quickly to market movements, leveraging advanced tools and technologies to gain an edge. As technology continues to evolve, artificial intelligence and machine learning are becoming integral to trading strategies. These technologies analyze vast amounts of data at lightning speed, providing insights that were previously unimaginable. And the global economy becomes increasingly interconnected, with events in one part of the world having immediate and significant impacts on Forex markets everywhere. This interconnectedness requires traders to be more globally aware than ever before. The Forex market is poised for further transformation. Innovations such as blockchain technology and decentralized finance are on the horizon, promising to bring even more changes to how we trade currencies. One thing is certain, the future of Forex promises to be as dynamic and fascinating as its storied past. As we look ahead, the continuous evolution of technology and global economic trends will undoubtedly shape the next chapter of this ever-changing marketplace.